Money words can sound more complicated than they are. In the next minute, here are 7 finance basics you will hear all the time in the United States. Income is the money coming in, your paycheck, side work, interest, or business revenue. A budget is your plan for where that money goes before it disappears. Think needs, wants, savings, and giving future you a vote. An emergency fund is cash set aside for real life, car repairs, medical bills, or a surprise job gap. Many people start with $1,000, then build toward 3 to 6 months of expenses. Credit is borrowed money, and your credit score is a quick signal lenders use to judge risk. Pay on time, keep balances low, and only borrow what you can repay. Interest is the price of money. When you save, interest can pay you. When you borrow, interest can cost you. Compound interest means interest earns more interest over time. It can grow your investments, or make debt harder to escape. Investing means buying assets like stocks, bonds, or funds with the hope they grow over years. It is not a guarantee, so diversify and think long-term. Quick recap: income comes in, a budget gives it a job, an emergency fund protects you, credit measures trust, interest is the cost or reward, compound interest snowballs, and investing builds for the future. This is education, not personal financial advice. Start simple, stay consistent, and make your money easier to understand.